What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today, I want to show you the best strategy or the easiest strategy that you can use to trade volatility indices on derivative. So what we want to do here is simple. We want to be using one time frame, the M15 time frame. Then we want to be looking at the market structure and we want to be taking trades off of that only. And what we want to do is simple. We want to see one break of structure and the second break of structure. After that, we want to expect the third break of structure, right? So from what you have learned so far, you will know that price moves in what? In waves, right? It forms what? Higher highs and higher lows, right? As it goes up. So when price is going up, it does this. So this is the same for the what? For the downtrend. You just have to flip it, right? So what you need to do is to understand that when you have the first break of structure, this one, and you are having the second break of structure, this one, this strategy allows you to then anticipate the third break of structure, which means you anticipate this this retracement to this one, to this particular zone that there, and after that you will see the price will then move from this zone to break this again to form another higher high. So what you need to see here is simple. We need to understand that we need one break of structure, the second break of structure, then we identify a demand zone after this second break of structure at this particular zone, and we wait for price to retrace back to the demand zone, and we enter our buys to target this particular high so that we can form another high. So with that being said, let's just go right into the charts and explain this with the charts. So number one, price has been going down in this particular zone. So what do you need? You need price to make the first break of structure, which is this one. Price makes this first break of structure by breaking this by breaking this high by this move, right? So that's number one. Number two, you need the second break of structure, which is this one. This one was achieved by breaking this high by this impulse. So now you are expecting a retracement to this demand zone right here. And what are you doing? You are expecting price to retrace back to this zone, retest this demand zone, and go on to form another higher high, taking out this existing one at this particular zone. Do you see what I'm saying? So this is how price is going to move. So your trade is going to be the third impulse, as you can see. So you want to see price breaking the first one, and you want to see price going for the second one, and you want to see price retesting the demand zone right here, and you want to see price going back to to the high that you want to be taken out. And this comes naturally because this will be your take profit, this will be your target, and this is how you want price to be moving just by using market structure. Let's look at another example. So this is a sell example on volatility 75, and for those ones who don't have accounts that can trade volatility indices, there's a broker in the description down below. Click that link, open your account, fund your account, and start trading this particular strategy on your account and make money. So this is how you're going to do it. Number one, we have what? We have a break of structure. This is the break of structure number one. Then number two, we have another break of structure. What we need is a retracement to the supply zone now of this particular index, right, where you see price making a retracement back to this demand zone, and after that you need to see price expanding from the supply zone to this, which is going to be your target, and this is the low, and you want to be targeting that particular low, as you can see. So you want to see price retracing back to this low, and this is going to be this is going to be a trade. I think this is a very simple strategy that you can use, that all beginners can use. So if you want to use this strategy, just to follow what we are doing here. So this is another example of how price is doing. Remember, we want to see first break, then we want to see the second break, and after the second break we are waiting for the retracement to a demand zone. Then after that, what are we waiting for? We are waiting for for an expansion of price, or a move that goes back to either the high or the low in that particular scenario. So number one, we have what? We have this break here. That's the break number one, right? Then the break number two is this one. Then after this break, what are we doing? We are marking a demand or supply zone, which is this one in yellow, right? And after that, we are expecting price to make a retracement back to the what? To the yellow zone. And after price gets into the yellow zone and gives you this particular candle that goes down, you stick there and you are going to use your stop loss above the demand zone or above the structure that you are working with, depending on the risk appetite that you are using, right? And this is going to be your take profit. Why? Because remember, after entering, you are going to go for the next high or the next low that you want to be taken out, and this is how you're going to do it. So you need to wait for proper setups, you need to wait for proper structures. You don't just get in, you need to wait for proper structures. That's why we are waiting for two breaks before we think of entering and trade. So this is what this is volatility 100 1s index on what? On deriv. So this is how we are doing. Remember, we're waiting for two breaks, right? After the second break, then we are going in for the what? For the Q. So number one, what are we waiting for? We're waiting for the first break, and we can take this as our first break. Why? Because price, this is the first real impulse that takes out this one, this break. So number two, what are we waiting for? Another break. So this is another break. So after the second break, we are marking a what? A demand zone that is responsible for that second break, and wait for price to make a retracement back to the yellow zone, and you will see price going what? Going up like that. So this is how we are going to doing it, and this is going to be our take profit. Why? Because we want this high to be taken out, and this is how we are going to be doing it. So with this being said, this can work on anything. You can trade boom and crash, you can trade volatility indices, as long as it has to do with deriv broker and it is a volatility index. So this is how you are going to be doing it. So I'm going to show you another example, but this time on what? On crash 300, so that you know that this can work on anything, right? So number one, this is how we are doing it. So this is how you actually catch spikes. Number one, break of structure. Number two, we're looking at the second break of structure. Then after this break of structure, what are you looking for? Number one, you can say you are looking for a what? For a demand zone or a supply zone, and in this case we have a supply zone in this area. So what are we doing? You're waiting for price to hit this supply zone, your stop loss goes above there, your take profit is going on the what? On this low, right? So you want to be marking your lows by what? By close of candle. So you would have been in this trade all night, and it would have hit your take profit at this particular zone. Or you could have used this as your demand zone again, and you could have caught this particular trade, and it would have gone to your take profit in what? 45 minutes or so. And this is how you're going to be doing it. And if you are looking at this again, you can clearly see that we have a break of structure at this particular zone, right? Break structure, then we have the second break of structure right here. And where is your supply zone? Your supply zone is right here, and you're waiting for what? For the retracement back to the supply zone. And after that, you are waiting for what? For a continuation to your take profit, which is the next low in this what? In this order. So this is how price would have moved to your take profit at this particular zone, and this is how you could make a lot of money trading volatility indices with this simple strategy. So this is volatility indices exposed. I'm out.